We might have just found the company of our dreams. Or is it actually a nightmare? Keep watching. Of course, guys, this is not financial advice, but we can't own the shares, so obviously we don't have any shares of Autocount. Now, guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. So we will be sharing our thoughts on an upcoming IPO. The company is called Autocount, and they have a very unique business model that is not found in Malaysia, in Bursa, Malaysia.
Yes.
And they are into accounting software.
Yep.
Right? Hence the word Autocount. So what do they do?
Yeah, so as what you pointed out just now, they sell accounting software, and not only accounting software, they also sell like POS and payroll. So POS is basically your point of sale software. If you want to know what is all of these terms about, make sure to Google them or you just use ChatGPT to know more further. And they have this brand name, which is obviously Autocount. And so what's interesting is that from 2006 to the date that they mentioned, which is, I believe, is around like 2022, financial year 2022, I think it's December. So they sold about 70,000 software licenses to over 210,000 companies in Malaysia and Singapore. So that's actually a very huge amount. Of course, they cumulatively count all of these. It's not like per year or how much. And they have about like 31 software programmers, which help them to do these accounting softwares and everything.
A quarter of all the employees?
Yes, exactly. So they have about 114 employees in totality. And they have about these dealers, which actually helps them to sell this software for them. So they are like a middleman or salesperson.
Sales agent, yeah.
Yes, exactly. So 269 dealers across these Southeast Asia countries. And they have two types of payroll of how you can do about. So the first one is called the perpetual license, or what they call the on-premise software. So this one is more of like a one-off payment. You just pay like, I believe it's around 5,000, then you can get access to their software programs. However, if you need upgrade, then you may need to top up another one to get this feature. So they have the product that is under this on-premise software is Autocount Accounting and also Autocount POS.
Right.
And then they have also another model, which is the subscription model. So this one is more unique. Not only you can do like monthly or yearly, they also like offer you quarterly and half yearly. So there's a lot of options for you to choose around now. And this program or the product is more towards their cloud native software. So for example, your Autocount Cloud XX. Yeah. So that is basically the two types of offering that they give. Okay, so this is just to further explain to you what is on-premise and also the subscription. So the subscription, they call it the software as a service, your SaaS. So the difference is that the cost to actually make on-premise softwares are much more expensive. There's a lot of things that you need to do. For example, like your license cost, your service agreement cost, your cost to
building
run
the
IT.
servers in someone else's place, right?
Yes,
rather
exactly.
than getting a guy to just pay you some money to use your servers.
Yes,
or
exactly.
a cloud service. Sorry.
Yes, exactly. So the cloud one, it's more of like you just use their own browser like website. And then if you notice the difference between the expenditure, right? So on-premise one, there is more of like a CapEx and OpEx together. And then the cloud as a service one is more of like OpEx. So yeah, this is just to illustrate you to see a much more clearer picture on the cost between these two. Now, okay, I will explain to you like what's the difference between on-premise and cloud even more like to a 12-year-old. So basically, there's this thing called the Excel sheet, your XLSX Excel, and then there's also Google Sheet. So Excel one, I believe you need to buy it from Microsoft in order to get this that Excel, that physical, to be installed on your computer. Whereas for Google Sheet, you can actually access it anywhere as long as you got internet.
Yes.
So one is like more of like offline, the other is more of online. But I believe the accounting software for their offline also have like online and offline features. So yeah, that is basically the simple example of on-premise and also on-premise and subscription. Now this is just another 4K view of their product. So if you actually a subscriber to Autocount, you kind of know all of these features earlier. So this is basically their dashboard, and yeah.
Roughly how much do they charge? Do they tell you?
No, they don't. But I'll show you the numbers later.
Okay.
Yeah. So what is really this company's mode, right? They actually have a very interesting relationship with their authorized dealers. Now, so they, like I mentioned just now, they have a lot of sales agents that help them to sell this product, right? And typically, they actually have to go through this interviewing process. They filter out dealers that they actually want to work with, and they actually set a limit of like a 1 year work relationship with them.
Okay.
And so what's interesting is that in order the dealers to actually work with Autocount, right, they have to sign like an agreement to be committed to hit the annual sales target that is set by Autocount. And they also need to make a one-off advance purchase of these softwares before they can actually sell it. So Autocount kind of get like a free money already from these authorized dealers. Not only they need to help them to sell, they also need to pay in order to sell their product.
They want to guarantee a certain revenue. It sounds a little bit like MLM.
Yeah, you can put it that way. Yep. And then the subsequent purchase, let's say if they manage to hit their sales target, right? So the authorized dealer won't really actually collect the payment. They will actually just transfer the payments to Autocount directly. Now, what if they actually fail to achieve this sales target, right? So this is interesting because Autocount will actually will forfeit all of the advance payment from these authorized dealer. Yeah. So there's actually a risk to these authorized dealers instead of Autocount. And I also don't know why. From the prospectus reports tonality, right, it seems like there's a lot of dealers that love to work with Autocount and to help them sell their software. So yeah, I'm not sure whether this is the really true mode or whatnot. But the incentive of working with Autocount, right, of course, they have a higher commission-based percentage, which they didn't disclose, but we kind of have a rough idea of how much from the management briefing from our research team that they actually share with us. So other than commission sales, they also get like some sort of rebates. So like when they bulk purchase the software, right, they give them like a certain discount so that when they sell it to the end customer, they can kind of mark up the price and earn the difference. So yeah, this is the unique mode that Autocount has. Okay, so of course, Autocount is not the first accounting software that they offer in Malaysia. There's actually quite a number of players. So these are the competitors. So this is basically all around the world in Southeast Asia. So they have like QuickBooks, Xero. I believe some of you guys actually use Xero. And then there is ABSS, which is Autocount's their accounting software. And then there is Flow Account and Express and another all kinds of names. So it's essentially this industry is quite saturated industry.
I mean software, right? I mean anyone can just code up
software. Right? Exactly. So it's
just a more advanced Excel.
Yeah, exactly. Okay, so this is the numbers for each of their competitors. So the one that I point here, this is Autocount. So if you notice the margins, right, the difference is margin is actually pretty huge. So if you see that their gross profit margin is around like 80%. Okay, so some of their peers also, they managed to make like 90%.
Crazy.
Yeah, and then 80%. And then what's interesting is that Autocount's profit after tax margin also is quite high. So they manage their employees also, like they make the cost like as minimal as possible. So they can actually like earn about 35% of profit net margin. Also, there's another company that managed to do that, which is eStream. But if you look at other peers, right, they only make like 5%, 16% and 20%. And they claim, Autocount claim that they are actually the largest market share in Malaysia in terms of their accounting software. So yeah, so that's actually pretty interesting.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
after we know about the business and about the competitors, right? So another interesting thing is the team of this Autocount company. So the first one we have is Mr. Chu Chin Peng, which is the executive director or chairman. He basically purchased this before it was called Autocount. It's called Soft Merit Sdn Berhad.
Okay.
Yeah. So there's actually two core purchasers. One is Mr. Chu Chin Peng and Mr. Chu Yen T. Now, these two, they are not related.
Just happen to have the same surname.
Yes, exactly. And then obviously this one is the executive director and managing director. So I believe they bought these two companies way back like 2000s, if I can recall correctly. And then they also managed to recruit these two interesting individuals, which is Mr. Ng Boon T. He is the sales and marketing director of Autocount, and he owns about 4.37% stake in the company. And he actually, before he joined Autocount, he co-founded this company called TM Century Solutions together with Mr. Lim Kim Seng,
Interesting.
who is the software development. So basically, they did sales before on the computer hardware and software in this TM Century Solutions. So they have like this expertise that can add value to Autocount. Now, I kind of dig a little bit further on the team. So what's interesting about this management team is that they have, I'm not sure whether is it discussed among them or whatnot, but they have some stakes in business outside of Autocount. So for example, like the property that Autocount is currently leasing, right, is actually owned by them. So when they pay the lease, it's kind of standard practice lah. I mean, it's smart also lah, so that you don't really like waste of money. But what's even interesting is that the managing director and also the chairman's house are actually quite nearby to each other. Initially, at first, I thought they were related, but then I realized that, so I thought when I see the addresses, right, it looks like they are staying in the same place.
Brothers or something.
Yeah, brothers or maybe even like relatives. But it's
one roundabout away.
Yeah, it's just one roundabout. So it's pretty close by to each other. So if there's like a relationship start to turn sour, right, it'll be quite interesting lah. Okay, other than that...
Yeah, so they own about 61%.
Yes, so both of them own 61.52%, but after the moratorium, of course, they can actually pare down their stake in the company over time. So this is something that you need to know. Okay, so now let's have a look at some of the numbers.
Yeah, it looks like something you just create as a default, you know?
Oh, yeah.
Right, on your Excel sheet. For the companies, you know, just
yeah, exactly. So if you look at numbers, right, it's very, very remarkable. It's like everything is like linear growth, like shoot up 30-40%, shoot up. Actually, it's like just copy and paste only. Yeah, and then if you look at their margin, is also very high. It's from 77% improve up to 80%. Yeah. And then their bottom line is about 40 to 50% growth per margin. So that's very impressive. Now, unit economics. This is also a thing to highlight to you guys is that if you notice the number of units sold is kind of increasing a little bit, but this is not as impressive as the average selling price that they actually disclose. So the accounting software average selling price, right, it actually starts from around like 2.8K in 2019. So this is the average one, the average selling price. And then it kind of grew like, I would say like almost 2x. To where it was. So this actually tells you that their software is a better inflation hedge.
Yes.
Yeah, and it's actually much more better than your medical inflation. Yeah, so to speak. So, but if you look at their revenue per subscription license, right, that one has been quite steadily, but then it is also still growing a little bit. And the number of users that actually want to use their subscription service also kind of like boosts up quite a lot. So yeah, this is a very interesting stats that you guys may want to know. Okay, so this is the segment breakdown of further for their different business segment from accounting, POS, and payroll. So obviously the accounting software is the one that is driving the most revenue. I believe it's around like 70% of the total revenue. And then you have this POS, your technical support and maintenance, and also your payroll.
Yeah, but payroll had like the biggest jump.
Yes, exactly.
Huge.
Yeah. But it's still quite small, even though it's a biggest jump. And majority of the revenue right now they are making is in Malaysia and Singapore. Also, they kind of like see some signs of like going up. And then, of course, there are prospectors that they actually try to expand the Singapore branch and also in other Southeast Asia countries that they mentioned. Okay, so this is the revenue by major customer. So as you can see, right, some of the customers actually don't really like go back except for Creative eWorld and also Ingenious Business and also Account Software Enterprise. So if you notice that other major customers, right, they on and off, they got buy, or maybe they just, or the number is too small that they didn't record
Right.
as part of the major customer. So yeah, that tells you a little bit about how sticky their business is in acquiring their customer. Okay, so this is the cost by major supplier. Of course, they don't really have one supplier. They have actually many. However, if you notice there's one supplier or maybe even two supplier in particular that has a very consistent payment. So we have VS Tech A-Star, which is also a listed company. If you guys actually Google, VS Tech Berhad. And then we have here the Microsoft Regional Sales. Of course, I think they need some Microsoft software in order to do their products. In their IPO proceeds, they don't really need any money to actually pay their debt. So that's actually pretty good. Their cash, they're sitting on a huge cash pile. I believe it's around like 10 to 20% of the against the market cap. So that is very impressive. And then the cash flow also has been very healthy. Same as their revenue and profit is going up linearly. CapEx also, they don't really spend much at the moment. So free cash flow definitely bump up a lot. And there's actually one dividend payoff, which is quite huge. And actually, there's no explanatory to this dividend payout. And I'll show you their ROIC right now. So if you notice, right, 3 years of ROIC based on free cash flow is about 200.
This is why we say like it is the quote unquote perfect company.
Yeah.
You really don't see these kind of numbers.
Yeah.
Now, however, I want to add that very often I've been through a listing process. I didn't list the company, but I've been through a listing process. I was sharing with our research team yesterday. And a lot of companies, when they go listing, they need to talk to the auditors or the underwriters rather to get some sort of valuation and get their numbers in order. So especially the auditors, when they go there and then they say, okay, look, I think that this software, right, which generates revenue for me, it has a certain asset base. So think of it like if you spend money on a factory, right? Typically what happens, they take that factory and then they capitalize it and they put it on the balance sheet, right? They use that and then they generate revenue off that. So there's a value to the asset. With software, usually they'll do something along the line of development costs. So if I've spent for this particular software or project, let's say 10 million, right? So then that could be seen as the value that the capex that people spend on the software. But because it's software and because you can say accounting rules haven't really caught up at the time, accountants are actually quite scared to attribute any value to a software, right? All the money that they spend on the software, the time and effort to build it, they attribute as zero value. I think, and the previous company that I was observing the IPO, they spend a big chunk of money on their software, but on the balance sheet, and they're listed, it's totally valued at zero. So now why this is important is because when you calculate ROIC, one of the components of IC, investor capital, is the property, plant and equipment, or that's kind of segment, right? And that disappears. So when that disappears, then
it looks very good. Yeah, exactly. So those are kind of like a off balance sheet numbers. Can you say that?
In a way, yeah.
Right. Okay. But what's interesting is that this one that they got negative one is because they have a huge dividend payout, which is about 60 million. Cannot really find the explanation behind this. So yeah, I mean, it is just there lah.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive.
This is almost towards the end already. So this is their IPO proceeds that they mentioned. So about 17 million is going to go through the regional expansion. They're going to be opening up a lot of offices overseas in Southeast Asia. And about 5 million is going to strengthen their R&D. And then 4 million and 3 million is more towards their working cap and estimated listing expenses. So I put this arrow over here, right? It's actually, there's a further breakdown on this regional expansion. So if you notice, right, this is the basically they allocated a huge amount, which is their payroll expenses to hire the new employees. They also set about 7 million in terms of advertising, which is quite a lot, and about 2 million in their office and whatnot. But if you narrow it down another time, which is their payroll expenses, so you see their salaries that they pay to their employees about 7.6 million, and they're planning to hire about 36 employees. So you can see, right?
Because they currently have 33 engineers, right?
Yeah, 31 software programmers.
Not all are going to be engineers, I assume.
Yes, exactly.
Okay.
Yeah, so there's like, I believe 30 employees will be sales and marketing, 30 employees will be customer support, 30 employees will be like software programmers. Okay. Yeah. But then if you divide these two, right, 7.6 million to 36, you roughly get about 200,000 per head. But I believe this 200,000 is not per year. I think they actually allocated for like 3 to 4 years or maybe even 5 years. So which is actually very smart of them to actually get this IPO proceed to plan for the next 3, 4, 5 years. Yeah. And then, so this is basically their expansion. They are going to be having presence in Thailand, Indonesia, Vietnam, Philippines, and also strengthen their position in Singapore. As for the strengthening of R&D, which is part of their IPO proceed, right? Their R&D is basically to hire more programmers. So that's about it. They want to hire about 31 more programmers, and the average cost per head is about 170,000. So which is a huge amount. Maybe they are planning to hire to keep them for like 3 years or 5 years, same as just now I explained just now. And their working cap is basically to hire employees also.
Yep.
So about 23 employees in Malaysia. These are the backgrounds of that they're going to be hiring, which is the finance, sales and marketing, sales and support. And then the average cost per head is about 190,000.
Got it.
So yeah, these are all the numbers that you can know. Then this is the risk of what I think Autocount has. So the first one is the software is not patentable. So which means that the things, the functions, everything can easily be replicated by a third party. So yeah, that's actually one of the risks. And then they also rely on the third party cloud computing and hosting platform. So let's say if this hosting platform, it starts to lag or doesn't function well, so you kind of affect Autocount as well. Yeah, and actually they did kind of have, this issue did arrive once. I believe it was in 2020 or something like during COVID times. There was actually a slowdown in their platforms. So a lot of customers kind of complain about it, but then they managed to solve the issue. And then the third risk is that obviously there will be intense competition. So if you notice the average selling price of their services has been going up, right? So that is something that you want to know, whether is it sustainable or not, this kind of increase, and then whether their pricing power will maintain in the future. Do they have that really good moat to sustain? And then the last point is basically they have a too close relationship with their management team. Obviously, they offer different directorship and stake in other business outside of Autocount. So if let's say this relationship turns sour, right, definitely I think it will become like a revenue group Berhad kind of like situation. If they are not careful about it. Okay, so this is the final valuation, which is you guys may want to know
it's out already, the valuation,
yes.
Right?
So they are planning to go about 182 million in terms of market cap. So the enterprise value is about 164, and if you divide it out, it's going to be trading around like 11 times, 12 times PE. So, sorry, EV
this
to
for
earnings.
A software company.
Yes, software company. I mean, that's why it is a perfect company, you know?
In that sense, yeah.
In that sense, yeah. The growth numbers, everything looks very good and trading at a quite fair value.
Yes.
Yeah, so definitely I think it will attract a lot of subscription in terms of their IPO. Yeah, we just need to see how oversubscribed this company is going to be.
Yeah, and I think it's important to know as well, I mean, speaking from experience, before listing, no one would never in time will companies try to will they work any harder to make their numbers look good.
Yeah.
And they will do many things to try and make it look the best, so that when they list, they get the best valuation.
Yeah, and also to attract more investors to pump the price. Yeah. Okay, so this is the final takeaway. Actually, the first 2 points that you see here, you cannot get it anywhere else. You only can get it in FIRL Pro.
Yes.
Because we have our research team that actually went for this management briefing. And basically, every 4 to 5 years, there will be an upgrade of this software, which means there is kind of like a recurring revenue because the customer needs to resubscribe to upgrade the software. And also, the management believe that going forward, I believe in 2027, every company will start to do these e-invoicing practices, which will be very beneficial to Autocount because everything's like electronic, right? So yeah, these two are kind of like the positive catalyst for this company going forward. And you want to know whether this mode is it a sustainable mode. So the number one mode is their relationship with dealer.
Yes.
Like authorized dealer. I mean, the authorized dealer love to work with them. And also they can charge their products very high. And I believe it was increasing like 20% year on year. So that's actually a very strong number. And yeah, my fourth point is basically they have a very strong growth and numbers at the moment. But we'll see post IPO, can they deliver the same growth and the same number? We hope that they can. And the last one is basically they have a very cheap valuation. So yeah, I think expect it to be oversubscribed to a certain amount for this Autocount IPO. And yeah, if you want to know more on our management notes for Autocount, which actually there's a lot of information that cannot be found in the
like we
prospectus
already have
report.
almost 50 of these notes.
Yes.
I think in the span of 7 months.
Yes, exactly.
And like a lot of these notes are
Yeah.
it could be we have certain access that the public cannot have, or we meet them privately and we share some of the notes that we've gathered for them.
Yeah,
with them.
exactly. So
And of course, our team as well have because some of them are in the institution, so they also get the institutional
access to it.
Access
To it. Yes. So if you want to know the full details about Autocount, make sure to check it in FIRL Pro. So yeah, MJ, that is about it. Any comments on Autocount?
Well, I think that I might give it a go. Who knows? But I will
Not financial advice.
Yes, I'll be looking at them. I've heard stuff that users who have made complaints about the software. So I'm not sure about the user experience. I don't use it myself, obviously. But I don't know whether this is a company that I'm willing to hold for a long time, because I think the competition, first of all, the numbers are going to attract people. Number two is my personal habit is to always discount the IPO numbers by a bit. I've learned that even though it may not be true, it's still a bit more prudent to just discount the numbers, because again, speaking of experience, not necessarily they inflate the numbers, but they will play around their sales and profit figures to make it look a little bit better. Like maybe they're supposed to make the profit next year, but they try to push it to this year. So because when they list this year, then the valuation can be bigger. So these are some of the things that we all have to be aware of when it comes to IPOs. Of course, we try to clickbait you today thinking it's the perfect company. It's not the perfect company. There are a lot of questions that we have. Growth can be an issue, things like that. Not because the market isn't there, it's just because how are you different?
Yeah.
Right. So that's those are my thoughts. Now, of course, guys, if you want more of this kind of stuff, and really this is just tip of the iceberg stuff, you can actually hop on our FIRL Pro program. Right. Our FIRL Pro program is one where we essentially do the research for you, or at least do 90% of the research for you, so that all you have to do before you personally decide to invest in a company is to read our reports. Number two, you do maybe some minimal additional research to confirm some things. And, if you're someone who maybe you're retired already, you don't put in a lot of effort, or maybe if you have kids, you don't have the time, or you have a day job that's taxing, but you still want to invest, this is the perfect program for you. These reports that we produce is, no more than 15 minutes long.
Yes.
And if you want some sort of reference point on how to construct a portfolio, we have a model portfolio with our FIRL Pro program. One FIRL Pro and one Telegram portfolio, which is a more short-term portfolio, you can call it. And if you still feel like, I think I'm not too sure, you can always check out our free sample.
Yeah.
As the name suggests, totally free.
Yeah, and just to add one more thing, our FIRL Pro members actually increased from 70 to right now 140 members.
Yeah.
So you can see that the popularity on FIRL Pro, which means in the future, there may be a price moving upwards.
We may be, we will be increasing the prices, but we don't know yet. Sometime this year. So yeah, try to be as early as possible if this is something that suits you. All right, guys. If there's nothing else, we always thank you for your support. Thanks for staying all the way until the end, and I look forward to seeing you in the next video.